Okay, so a few days ago I posted a video on Enbridge and why I'm buying it, and I keep on getting asked, what about E-Split Corp? Is that a better option? Maybe I should do that instead because it has a higher dividend and it's basically investing in Enbridge anyways. Well, let's get down to see what E-Split Corp really is and if you should invest in it and compare it to Enbridge, because what E-Split Corp really is just preferred shares of Enbridge. Let's get down to it. So E-Split Corp does pay a 10% dividend. That's massive, that's huge, that's amazing. However, Enbridge pays 6.2%, which is about 4% less. When we compare the companies, when we go to a 1 month chart, we can see that there is a pretty good increase in stock price. And we can see that E-Split Corp, they have an average volume of about 68,000 shares, while Enbridge has an average of 7.3 million. So over the past month, they've had about a 30-ish cent increase on E-Split Corp, while Enbridge has had a close to $3.40 increase on their stock price. So when you compare the increases over just the last month alone, we can see that Enbridge actually gets a higher growth than E-Split Corp. That's because E-Split Corp does take a little bit of an MER because they are handling your money buying these Enbridge preferred shares. And at the same point in time, you are getting a higher dividend, so that's kind of the trade-off there. However, if you're looking for still a high dividend of 6% and a little bit of a growth opportunity, then Enbridge might be the better solution. But it's not just that. Let's get down and let's check out even more information. So as we can see here, right on the profile of E-Split Corp, E-Split Corp is a corporation investing in common shares of Enbridge, which is a leading North American oil and gas pipeline, gas processing, and natural gas distribution company. E-Split Corp offers two different types: a Class A shares that pay monthly distributions and offer the opportunity for capital appreciation potential, and two preferred shares that pay a quarterly distribution representing a yield of about 5.25% per annum on the issue price of $10. So when we look at the actual dividend of E-Split Corp itself, we can see that they pay a monthly distribution of around 13 cents per share. And they've been doing this since May of 2019. Beforehand, it was a 10-cent per share dividend. So they don't really increase their dividends all that much at all. Meanwhile, when it comes to Enbridge, we can see that Enbridge does increase their dividends and increases them substantially over that time. For example, 2019, where we seen E-Split Corp's 30% increase, well, guess what? We still see a massive increase since that time to current. So when you're investing in a business or in a company and you're really looking at the dividend saying, well, I really like that 10% dividend, there's a couple of other things to actually look at. So for example, if you are currently retiring, you want to have a very minimal amount of fluctuations in the market price of the shares that you're holding, E-Split Corp might be a better option because they give you a steady monthly dividend at a 10% per year. And it doesn't really fluctuate all that much. Meanwhile, with Enbridge, if you are younger like myself at 31 years old, well, guess what? You now have the ability to, I would say, invest in Enbridge as a better option, because with Enbridge, you're getting the ability to essentially see your stock price rise, hopefully. And what you're also seeing is a higher, or at least a more consistent increase in dividends. And that is very important to myself because eventually, if you look at actually Enbridge's past history on dividends, they double roughly every 5 years. So for example, right now, if you're getting in at 6%, 5 years from now, it'll be, in theory, due to past history, which we can never go by, it could be 12% in 5 years on your initial investment. However, What is eSplit Corp going to be like in 5 years? We don't know. There isn't enough history on eSplit Corp to actually know how often that they're going to actually raise their dividend. And because of this, at this point in time, if you're younger, I would definitely say Enbridge would be the better option. If you're a bit older, maybe eSplit Corp might be a better option, but I still prefer, no matter what, between the two, I would personally, and this is my own personal opinion, I would say Enbridge is a much better option because you're seeing price appreciation, you're not having to pay an MER, and you're also seeing a higher increase, or at least a more consistent increase in dividends, which is important if you're looking to grow your income over time. Now, these are my own personal opinions. Everyone has their own personal opinions. That's why you should always do your own research and take from a couple of different resources yourself before making a decision on an investment. Never trust one random person on the internet. Do your own research, and I'll see you guys again next time.